Hey traders, Lance here. In this video, I want to go over all these orders that you see and what separates good orders versus bad orders. Now, I want to be clear. Just because the order is good or I think it's good doesn't mean it will work. And just because I think an order is bad doesn't mean it's, horrible, that it can't work. I'm just going by history of doing this so long and, looking at different premium amounts, volume amount, ticker symbols, and stuff like that, because everything is in trading is probability, but more importantly, risk versus reward. And we have to have proper position sizing for the amount of risk. That's how you make money in the long run, not by being right or wrong. I could be right 100 times and lose one time, and my 100 times of gains are wiped out. Remember that. That's the key to trading. Risk management. So the first order that we see here is Square. Square is a very popular stock, okay? That's the first thing that comes to mind, and just remember that. So Square, the first thing, or the second thing, is sweep detected, good, check mark. 675 contracts in Square. Now, this is what I want you to look at here. Let's go to Square and the time and sales in the option chain. Square's traded 165,000 calls today to 108,000 puts. So 675 contracts ain't that big of an amount. Let's just remember that, for example. March 5th expiration. So this is a weekly option. So this option, I think it already expired. Yeah, because today's Saturday. So it was a weekly option. Weekly options are high risk, high reward, okay? And I could tell you this much. It's Friday we had a big rally, but Square is at 216.44. These calls, 215, and they paid $1.75, so that's 215 plus 175. That's 216.75 was their break even. Yes, Square has rallied from where they bought the calls, but those calls still didn't finish in the money. Remember that. Next thing, they bought on the ask, good. They paid full ask. The order was 140 by 175. Opening trade, good. Square short stock restricted. That's actually a shocker to me. The stock was 214.89 at the time, and the risk premium was only 118,000. So that's what I mean. This trade was only 118,000 of premium on a stock that has traded 24 million shares during the day, right? And it's traded what? 165,000 calls today. So this order is not making a dent in Square. So stuff like this, can you trade them? Of course. Is it risky? Yes, right? And historically, if I'm buying weekly options, I usually want to buy options that are a little cheaper than $1.75, usually under $1, just because the risk versus reward is better and cheaper options. So, can this trade work? Yes. Is it a higher probability of working? No. Next order, NOV. We spoke about this one in the previous videos. This order gets my thumbs up. Has everything I like. Breakout on the chart. I would have loved to see this order a couple days ago and then sold the breakout, to be honest. But, short dated option, I'll give it that. So that is a little bit risky. Remember, as the expiration is closer, the options are more sensitive to theta decay or time decay, right? So we have to remember that. There's only 12 more days before these options expire here at NOV, right? The March monthly expiration. They paid 80 cents, so they're in the money options. That's what I really like. My rule of thumb is 10%. So if they're 10% out the money, I just say no, thank you. If they're, and that applies for calls and puts. I want to buy something that's usually right in the money or close to at the money. I'll give myself, again, about a 10% cushion. Had everything we liked, big risk premium amount, and I bet you, wow, it traded 13,000 calls today and only 609 puts. So that's actually a lot of calls. But we can see, if we go to time and sales right here, those calls traded 3,000 total of NOV calls. So one order was 1,712. Now, they came out and bought fully 3,000 of them. So that is huge, baby. That's a big order. It's about 240,000 of risk of premium. They also bought some Jan 2230 calls. So they went long dated. We call those leaps. We see some more call options, and we could just go to time and sales right here, right? And we can see all the options. Green means bought, red or pink means sold. I'm colorblind, so don't ask me the colors, but I could tell that's green. All right, so NOV, thumbs up. XPEV, spoke about this one in a previous video too on here. High risk, high reward. Why? Because earnings. XPEV doesn't have a lot of earnings data. It's a relatively new stock. It's an ADR from China in the EV market. But last quarter, the stock did pop on earnings. Okay, so that is actually a bullish signal. Usually I want to see at least 3 out of the 4 previous quarters up if I'm going to think a stock goes up on earnings. XPEV only has 1 previous quarter because it is, again, a relatively new stock. The 31 strike calls and their weeklies, so next week expiration. That is a little bit pushing it out the money, but it is earnings. And the market makers are implying about a $4.75 move for next week with $3.33 or $3.37 just for the earnings event. MMM means market makers move. So I would consider this high risk, high reward. Let's say XPEV, because sentiment and the EV stocks, they're all getting their butt kicked right now with the NASDAQ selling off. Maybe this trader's being a contrarian and thinking, hey, I know earnings are going to be good. The stock's going to go up. And maybe the stock soars. Maybe it soars $5 and goes to $32. Well, these call options are going to go from about $1 to, well, actually, they might not even move. Ooh. So, you have to look at that too. They'll probably still have some premium on them, so maybe they'll go to 150 or 175, something like that. But again, relatively expensive options for earnings, but that is earnings, and XPEV is a very high implied volatility name, as we can see here. Look at that, very high implied volatility. What is low implied volatility names, you may be asking? Names like AT&T, for IBM, Verizon, Pfizer, names that usually don't move that much. So XPEV, again, I think it's high risk, high reward. It's earnings. Also, another thing I don't like seeing is it trades 40 million shares. It's traded tons of call options and out the money call options. It also traded a lot of put options. So, to me, I think it's a dice roll. Again, it's traded 100,000 calls. Even 2,000 contracts is not making a dent in XPEV, right? And 76,000 puts. So if I had to trade this, or let's say I wanted to, let's say I was in the earnings mood and dice rolling mood, I would trade this very small. So maybe something like, if I had a $10,000 account, maybe I put $100 or $200 in it, right? Something very small right there. Next trade, NEO. Now, the one thing that you'll notice about NEO here is NEO is not an opening order. You see, we don't have that opening signal. Why is that? You may be asking. Well, let's look at the option chain. NEO trades a boatload of options. Remember that, right? So it's traded 41,000 contracts. That's a ton. With 4,400 already trading. So 1,461 contracts is volume is less than open interest right here. So do I like this trade? Not really. If the market rallies, will NEO probably rally this week? Sure. It's right on the cutoff of being too far out the money. Well, actually, we could give it a little bit of room. But it's high risk because it's short dated, high reward. And NEO, 1,000 contracts in NEO, 1,461 contracts, really is not big. You could see it trade 877,000 calls and 536,000 puts, or 1.4 million contracts. So not a big enough order for good old Lance. 178K. I have friends who can put in an order that big on NEO. So, don't love it. Can it work? Sure. Am I going to probably, if I had to trade it, I would trade it very small. It wouldn't be something I'm doing jumping jacks about. And again, NEO, the chart sold off. Maybe they think XPEV rallies and therefore all the EV stocks in China rally. That could be it. Just trying to put pieces of the puzzle together. Mara, this is a very high volatile name. It's just, volatility is at what, 200 and, my goodness, 247% with a $15 implied move. I mean, it's literally saying market makers are saying the stock can move $15. So, yeah. It's a Bitcoin name, highly speculative, went from $49 to $30. The chart is a mess. 812 contracts. Just on the top of my head, I could probably say Mara's traded 100,000 calls today. Yeah, 114,000 calls. And why don't I like it? You may be asking. Well, look at the strike price. So I don't like the expiration, March 26. What is March 26? Unless it's earnings, that's weird, right? In a bad way. But the 70 strike calls, 70 strike calls? They're saying the stock is going to more than double. If they bought, let's say, the 29s, the 30s, the 32s, the 33s, I'd like it a lot better. But this is just too far out the money for me. 114,000 is not a huge amount, but volume is less than open interest. It's not an opening trade. So Mara, no thank you. I want some bigger deltas, is what we call, so closer to the money. Next trade, Snap. I love a good Snapchat. I've made a lot of money in Snap before, so I do have a positive history with it. Sweep detected, 1,301 contracts. Not the biggest for Snap. Snap has traded 28 million shares today. March 12th expiration, though, so that is the weekly options. High risk, high reward. Snapchat is implying a pretty large move. High implied volatility name with a recent market sell-off. 61 strike calls, so those are, a little bit out the money, but not horrible. High risk, high reward, because that theta decay is going to burn because they expire in 5 days. Opening position, I like that. Premium, 118,000, not the biggest order. I'd like to see in Snapchat at least 500K because it trades so many shares, and it's traded 184,000 calls, 292 puts. Does this matter? No, because let's say a trader sold 100,000 puts. Selling puts is bullish to neutral, right? So I don't care what the total amount of calls the puts are. What if a trader sold 20,000 calls, right? That's neutral to bearish. So I don't look at the total amount. I'm just looking at mostly the is 1,300 contracts going to make a dent in Snapchat? Heck no. Heck no. Next trade, LBTYK. This is long dated. See how it's Jan 22 expiration? I don't know what I'm going to do 2 months from now, 3 months from now, let alone January 2022. So I usually ignored them. And then MGM, not an opening trade. So, again, I don't hate it. I like the casinos here. The casinos have been strong. We'll look at the chart. So MGM, I really can't say anything bad about it. I wish it was an opening order. I take it there's a lot of open interest in MGM. There is. So, it's not horrible, but I'm not doing jumping jacks over it. Let's find an order that I think is really different here. Let's go up to the good old list. What stuck out like a sore thumb on Friday? We'll do UNM. This one kind of stuck out. So UNM. All right. So 2000. Let's go right here. Look at this one right here. Highlight it. So UNM. 2,038 of the April 30 calls. Oh, April. Look, some time. I like that. I like that a lot. They paid 113, so basically 115 above the ask. Oh, above the ask. Okay. So they uppaid at the time for the trade. Opening trade, premium 232,000. That's a decent sized bet because the stock has only traded 4.7 million shares. What is UNM? I think it's a financial. Let's look at the chart. Wow. Beautiful chart. Love it. Love the chart. Riding the 8-day moving average higher. We'll zoom out here. That's a beautiful chart. So something like this, I get excited about, right? It's an opening trade, and you can see, these got mentioned on TV actually. So you had a lot of retail piling after, but 13,000 contracts traded. It only goes to the 35 strike. That's another thing I'm looking at, So the market makers here in April, they can't even sell the 40 strikes. That's interesting there. Are they decently close to the money? Yeah, 30 strike calls, stocks at just shy of 29. So this is something I would, get excited about, get like, oh, wow, I can dig it, stuff like that. This fits my criteria. We can actually click on it and go to it as well. Sweep ticker symbol, expiration, above the ask, opening order. So a trade like this would get my double thumbs up and something I would look to take a little bit action on because it meets all the criteria that I like. And again, it's a unique name, right? UNM. How many traders are going out looking at UNM on their watch list? So I like unique stuff, right? As long as they have some liquidity, some volume, the chart backs it up. That's what separates good orders from bad orders. The good orders, I can put more money into, more risk, allocate more capital into them and have a little bit more risk because I think they can have a higher probability. And if something has a high probability, my risk tolerance goes up because I can, define my risk while trading options. That's exactly why I trade options. Define risk. Risk versus reward is everything in trading. If you could get that down, big thumbs up in trading.